Assalamu alaikum everyone, welcome back to another video. I hope you're having a wonderful day. So in this video we will be looking at Salesforce. Salesforce is one of the companies that I own in this portfolio. I do own it also in the family portfolio. I really like the business model. I've had this company in the portfolio for quite some time. It's down quite a lot, and what we're going to do today is look at the financials, look at what the company does, look at this, to see if there are any issues with this company that we should be aware of as long-term investors. As always, we don't listen to the market just when they start selling everything, but we also just make sure that we are, after the company has reported its earnings, is always important to look at the company and see if they are on the right track. Now, one of the things that we'll be doing the next 24 hours, inshallah, is looking at Broadcom. They've reported last night. They are actually up over 12%. So let's see, this is pre-market that I'm recording this video. So once the market opens, let's see where they end up. But right now they are up about 12% because apparently the earnings was quite good. There's a lot of analysts that are coming up and basically moving their price targets and so on. So we'll see. Let's see what basically the overall consensus are after today, inshallah. So I'll be looking at that company at some point as well. But let's now start with Broadcom, Salesforce. But before we do that, it'll be absolutely amazing if you can join us to the Patreon account. Right now, everything is discounted in terms of if you join in. Normally, it's about $5, but right now you pay half of that if you join us. You get access to the family portfolio. You get access to the monthly undervalued stocks. You get private Discord where a lot of brothers are sharing very good practices. The Sharia compliant investing ebook that I did quite some time ago. You got dividend trackers, which I used for, if you watched my video for the portfolio update, that's basically what I use. You can just, as soon as you buy individual stocks, you can just put the tickers and it actually does automatically a lot of the things for you. So yeah, there's quite a few things that you can get your hands on, but let's start with this company that we want to talk about today. So Salesforce is basically a cloud-based software company that specializes in customer relationship management. So that's CRM solutions basically. It provides businesses with tools to manage sales, customer service, marketing, e-commerce, analytics, and so on. So this company recently got into sort of a but he has some sort of AI before, but everybody's talking about AI, so they actually also in that side of things. One of the things I really like about this company is the subscription based model. This is important, okay? This is where they get their recurring, annually recurring revenue, which is quite good. So that means a customer will come to this company, they will lock it for, I don't know, a couple of years, and every single month, every single year, this company will get basically paid automatically. So they use the software out there, and once you are in that environment, it is very difficult. It's very sticky business, very difficult to move from this company to another company. This is why I always compare this company to companies like Microsoft, companies like Google and so on, and even Apple to a certain extent with their phones and devices, whatever. Once you're in that environment, it's quite difficult to get out. So they do have that sort of a subscription model, which I really like. So this company, Adobe's and all of these companies that basically used to sell, like Adobe for example, that used to sell CDs and whatever, now you don't need that. Now you can just literally sign up within a few seconds. You actually got the software on your computer. You don't need to basically go to somewhere else to buy it or whatever, and you just pay monthly. Back in the days you buy the whole CD, now you don't, and it's way cheaper for the company, it's way cheaper for the customers, and it works out perfectly for everybody. So they do have a lot of basically AI powered basically systems in place and so on, and their main competitors Microsoft, Salesforce, and Oracle. I would say Salesforce is probably the main one, and Microsoft is also up there. Oracle not so much. I think the cloud side of it, yes, Salesforce is there. Now one of the things that I want to talk about now is, I'll show you in a bit the earnings that they've released recently, but one of the things that they basically actually now kind of marketing a lot more is the agent force basically, and it's showing massive growth. This is basically one of their new products. So if you can see here, it says the deals increased from 200 to 5,000 in one quarter, highlighting its potential as a significant growth catalyst for the company basically. And they have that data and AI and annual recurring revenue side of things. So they've actually expecting a lot more from this agent force, and I think this is probably one of the best things they have come up with. And of course, every single person out there or every single company is talking about AI, and they all have that product. And what they're doing is basically their AI basically is helping the customers when it comes to regards, for example, things like sales, things like service cloud, for example, their marketing, their commercial clouds, the data cloud side of things, the platforms that they use. So every single basically section of their business now has some sort of AI intelligence that's helping basically their customers make the right decisions and so on. As you can see, say Salesforce reporting 9% revenue growth and 13% adjusted operating profit growth, with a focus on margin improvement and cost management, which is something that I really like. Data Cloud and AI achieved 900 million in revenue with a significant future growth potential. So that is basically, now it might be 900 million, but in the next few, hopefully quarters by the end of the year, that might be at least 2 billion if they continue with this trajectory. Then you've got Salesforce focuses on cost control and robust free cash flow growth, which is very important. This company was basically literally burning cash for quite some time. Now they're focusing more on free cash flow growth. This is why they're becoming a growth company. And as you've seen, they started paying dividends recently and buying back their own shares. So it's becoming a mature company, from company that was basically diluting their shares and so on, to now saying, okay, let's focus on free cash flow. Let's focus on paying basically shareholders either dividends or buying back their own shares, which is quite nice to see. Now, of course, there will be some weaknesses, of course. So they're saying basically they revealed some weaknesses with revenue growth slowing and guidance for the next quarter indicating further deacceleration affecting long-term growth perspective. So that could, the company cannot be growing every single quarter, I don't know, 40-50%. So the fact that they are expected to grow, I think it's at basically high single digits for the next year. That's probably why a lot of these customers or a lot of these analysts are basically saying the company is not going to do well, or whatever they basically trying to say. Of course, the company cannot be growing. It's becoming a mature company, like we've said. So if they can grow 10% year over year in terms of their revenue, in terms of side, basically EPS and so on, then that is significant. And the company, the fact that they now have a newer product that could potentially help them in the long run. So the agent forces hopefully will help the company in the long run. So let's see a couple of more other things. Okay, so just a breakdown. So subscription and support for basically that quarter was up about just over 6%, a year over year about 8%. The sales side of things just about 1%, and then year over year was about 8%. When it comes to the service side of it, was 1.7 and for the quarter, and then year over year was about almost an 8%, which is quite nice to see. Now there's more. Marketing and commercial was about 1.7, 6.5 when it comes to for the 1 year. Integration and analytics was about 30%, and when it comes year over year basically was about 5% and so on. Platform and other was about 5%, 11% for the year. So there's nothing wrong with the business generally. Okay, and if I show you a couple of more things, just if we go back here, if we look at the financials for this business overall, you can see from $6.6 billion in 2016 to right now $37.8 billion. So that's a massive growth for basically for this company, and you can't expect the company to basically carry on with this trajectory. It's gonna have to at some point, okay, slow down slightly. And that doesn't mean basically it's doom and gloom all of a sudden. Okay, and you look at this, look at the gross profit for this company, 29 billion dollars of the $37 billion. And then of course they're going to spend a lot of money on research and development, okay, and other basically operational expenses. They do marketing wise, they spend quite a bit, and I've seen they've got like some celebrities but basically other are advertising for them and so on. For now that's okay, but in the long run I want that to stop in the long run, because that's not, the company is very well known. You've got a business that is very sticky and has a wide moat, so I don't think people, you should be paying that much of money or whatever for advertisement. And then you've got about $6 billion of that net income as a net income. And then when we look at the balance sheet, the two things that we normally look for is the total assets against total liabilities. So assets of $102 billion, let's call it $103 billion, and then total liabilities of only $41 billion. So they've got more than double to cover that side of things. So absolutely nothing to worry about. Now what I'm going to quickly show you is the rest of that information. We know the company has a wide moat, 273 billion market cap, huge company if you like. Current PE just about 44 according to what is this what website am I using, Google Finance if you like. Forward P is about 25, the sector is about 23, so not far off, and then 5-year average was about 42, so it has come basically we're expecting, okay, it seems basically based on the 5-year average, basically the stock will be slightly cheaper. Free cash flow almost closer to basically $12 billion, and the free cash flow compounded annual growth rate for the last 5 years we're looking about 29%. I'll share this with you guys in a second on using Seeking Alpha. This website is loading still. Return on basically invested capital on invested capital is about 8%. Net income margin for the last 5 years we're looking about 9%. Revenue growth about 20%. EPS about 71%, and current liabilities is basically lower than the current assets, so this should be about 2, if not basically lower, okay, if not basically around the same. So they're expecting the earnings to grow about 9 point something percent, so they're about basically 10%, and EPS and revenue about 8% for next year. So this is probably one of the reasons why some analysts think this is doom and gloom all of a sudden, because the company is not growing 20-30% every single year. And of course with the new AI product that could potentially change in the next couple of quarters, years, but for now this is what they basically people are expecting. Again, remember, this is expectation, the company can change that, so this is just an estimate. So current price $286 per share. Fair value from Morningstar is $315 per share. That's about 3 stars right now, so basically slightly cheap when it comes to in the comparison to where the Morningstar think it should be. According to Simply Wall Street, it's 30% undervalued right now. $443 per share is where they think the price should be, and according to Refinitiv is basically $388 per share. That's about 20% up to 28% upside from where we are. They're saying it's still as well as a buy. 394 according to TipRank, 33% upside from where we are, a moderate buy from them. $378.79 per share from Seeking Alpha, 32% upside from where we are. That's basically a buy as well. So everyone agrees more or less it's actually the stock's a buy right now. It seems very cheap in comparison to where it has been before. In terms of Sharia compliance side of things, absolutely nothing to worry about. They used to dilute the shares up until basically 2024. So 2024 when the company started buying back their own shares, so as you can see, a slight decline from 2024 to 2025, and they expect it to basically, they haven't announced any buybacks I think recently, so we'll see what they say. But overall, that is the company. Now a couple of things that I want to show you. First one is basically when you look at what the analysts are saying, basically where they get the price tags from and so on. I will pause the video and you can have a basically quick read. I'm not going to read the whole thing, but this is basically the CEO of the company, basically Mark Benioff, that's talking about the company. He said if few enterprise software companies have really ever delivered this kind of numbers, and I guess only a couple have ever delivered guidance in the 4 billions, which is basically important. So that shows this guy is very, by the way, when you see him, he's very animated, he's very salesperson. So sometimes when I listen to him, I just take a pinch of salt some of the things that he says, but overall the numbers do not lie. So despite Salesforce projecting fiscal 2026 revenue at 40.7 billion, midpoint, it is less than basically what the analyst was expecting, and this is probably why the stock went down. Okay, nothing else to do with the business and so on. This probably they think, okay, this is what they expected. Okay, this is what they got, this is what the company said. Again, remember the company is also estimating, so anything can happen. The company provides fiscal 2025 guidance that came in below the street across basically the top and bottom line, as the company anticipates 200 million FX headwinds, which can happen. Okay, that's basically part of there, because remember these companies sell products to worldwide, and that happens a lot. So the Webbush basically said, and that's Dan Ives, basically Ives is one of the big boys when it comes to any technology companies. He's bullish on the Nvidias and all of these companies. So sometimes he knows what he's talking about, but sometimes you have to take a pinch of salt to anything these analysts say, because they get paid to do this, right? 425, but basically to a price target. Right now, the company we've already seen is about 200 something, right? yeah, $286 per share, but this is where they think the price should be, $425 per share. There's a couple of others as well. Morgan Stanley, for example, maintains an overweight rating and $405 per share is where they think the price should be. And there are a couple of others, so I'll just pause the video so you can have a look at it. But there is a few others. The Bank of America, for example, is saying from 400 to 440, so they've increased up but lowered this price, or target from basically from 440 to right now 400. So it's slightly they lowered for whatever reason. So overall, the company is doing absolutely amazing. I don't have any concerns about the business side of things, and I will continue to add to my shares, and I'll show you exactly how many shares I own in this portfolio. You can check out on the Patreon account if you want to see how much I own of this company in the family portfolio. Now looking at basically the total return for this company for the last whatever years. For this year, they've actually barely did anything, whereas the S&P 500 basically returned about, for 1 year, basically about 12%. Now, if we look at the last 3 years, the company has done about 46%. The S&P has beaten the S&P 500. SAP, which is basically a software company based in Germany, I think, which is very similar, sells similar sort of product. Adobe and ServiceNow and Microsoft is the companies that we're basically comparing it with. So it's done relatively well. It's done better than Adobe, but it hasn't done as well as the other three companies. Well, better than Microsoft anyway. And then 5-year growth, basically the 5-year return, we're looking at about 75%. It hasn't beaten the S&P 500. And then as you can see, the rest of the companies here for the last 10 years, 356 basically percent total return. This company has only started, by the way, paying dividends very recently and so on. But as you can see, it has beaten the S&P 500, very similar to this one, slightly lower than Adobe, and it's way lower than ServiceNow and Microsoft. These two companies have been absolutely beast over the last whatever years. So that gives you an idea of where the company is. I'm not sugarcoating anything. This is probably one of the, I genuinely think this is probably one of the best companies out there. I love the business model, and I'm going to continue holding on to this. So if I can get those double digits, if they can do these double digit basically earnings growth every single year, I'm happy to hold it. So let me quickly show you my shares of this company. Here we go. So I do own about 12 shares right now in this portfolio. I do own basically quite a few of shares on the other one as well, on the other portfolio. And my current price, basically average price, is $235 per share, or £184 if you like. So, and I'm up about 20%. Okay, it was slightly higher than this. I think at one point it was about, I don't know, £1,000 up, but it has come down just with the overall basically markets right now. So we will see. We'll continue to monitor. I will be buying more, inshallah, and my price target probably will be this sort of a price. So if we look at it now, the overall, so we've added Morningstar, we added Simply Wall Street, we're adding Seeking Alpha, the discounted free cash flow model that I used, that gave us let's call it $360 per share. Right now it's 286. That gives us about 26% upside. If we say, for example, you know what, because this company might be volatile, we want to base 20%. So right now you should be buying the stock, $287 per share. Basically, is basically the target, which is basically where it is right now. So overall, really great company. I like the business model, and I'm going to continue to hold it, and I'm going to continue buying more of, inshallah. And I like the fact that they started paying dividends. This is for me a hold for a very long time, inshallah, unless something crazy happens, and of course then that I will let you guys know, inshallah. If you enjoy this type of content, please like the video, subscribe to the channel, let me know if you have any questions, and of course don't forget to join us while we have the Ramadan sale, inshallah. The link, basically the code that you need, is on the description. So when you watch this video, go to the description section. There is a code there. Use that code when you sign up, and you'll get 50% off, inshallah. Have a wonderful day. Assalamu alaikum.